Hi everyone, Natu Myers here again, back with another video. And today I'm going to talk about how you can use feedback loops and systems for you to be able to find investors and raise over $10 million with high precision. So it may be a bit of a unique topic, but hear me out, because in just throughout the process in working with people as as a securities dealer and as a consultant in starting what is called an exempt market dealer twice, and looking at the processes that are required in helping people raise tens of millions of dollars. And these principles, I didn't really care much for investment banking, to be honest. I was more of somebody who was just more interested in honestly just launching a business. My background was in software, and because I used these powerful principles, they actually helped me get into investment banking in the first place. And you can see how chaotic it can get. And by applying it in the industry and by applying it with some of my clients, I've used it to help our clients raise, in excess of $30 million in the last couple of weeks. And these principles, you can test them out for yourself, but take a look at them very closely. And so really the first principle is, and really some background as I'm just looking off my notes, is understanding that really the points of understanding this feedback loop and the way feedback loops work is just to have a better understanding of reality. Because there are several blind spots that prevent us from really understanding reality. And really this is taking the scientific method and applying it to your current goals in your business, and doing it in a way that is based on principles of systems and understanding strategies and tactics that work in different industries and everything. So what really is the process? Well, really the process is, you have inputs, you have processes, you have outputs, and you have feedback. So is this taking the system and then breaking down what a system is? Because pretty much everything that we know about is a system. So in order to understand as much as we can about everything, we have to understand systems. So one way that has been really well proven to break down systems is by breaking it down in a way that was just described. So you have inputs, you have processes, you have outputs, and you have feedback. And so the inputs are the things that go into the system. The processes are the things that take place. And then you have the outputs of those processes. And the outputs of those processes feed back into the inputs. And you can see it's really simple, and it's actually really basic stuff. But actually, like applying it makes a whole big world of difference. And so I'm going to walk through like the inputs, processes, outputs. And I'm going to walk through 3 examples of how people have used this to actually, create businesses, launch investment banks, and raise over $30 million. And I'll walk you through 3 examples for each. So one, really an input is a hyper detailed vision, a description of your goal, your idea, your strategy, your mindsets. In other words, it's having a hypothesis. It's having an idea of what is it that you really want. And by having an idea of what you want, then it's possible for you to potentially get there. So, let me talk about the example of before I was in investment banking. Because before I was in investment banking, really my goal was to create a business. And then, different mentors and so on taught me that the number one goal is to solve a problem. So by understanding and taking the inputs in from people and saying what problems do people have, I was then able to find the problems of people wanting to raise tens of millions of dollars. And I know it sounds really trite, but that's the truth of how I got to investment banking. And then from there, understanding, the way that we actually help our members, Raisers.com, raise capital is by by showing people this system here and saying, as you go out in your capital raising campaigns, we have joint venture agreements with different family offices and investment banks that are FINRA registered. And based on that initial feedback, it gives people a good we get people to get a hypothesis of what really are the initial types of investors that are relevant for their company. And then it's validated by getting that and feedback from some initial contacts and so on. And third is one of the members executed this. This was for an IT acquisition, for example. And so one of the members actually executed this at Raises.com. And the first step was to have a hypothesis of the types of, debt providers. In this case, it wasn't an equity case, it was a debt case. What type of people will be most relevant? And because of that, that's how we got that click from that hypothesis. So number one is the inputs of the system. Number two is going through the processes. And so now the inputs is more of a big, broad idea and a vague strategy of writing stuff down of what you think would happen, but actually going out to actually executing the processes and executing the tactics is actually what happens. So, in terms of me actually, and go back to the three examples, in terms of me actually working on getting into investment banking several years back, the point was really to look at what work was required. So I personally saw that in order for me to fulfill on my hypothesis of solving the problem of getting people to raise capital, I needed to register with the Securities Commission to be able to get the necessary knowledge for me to be able to know how the top people are doing it. And, I took some of those exams, and from there I assisted, new dealing representatives, people that are connecting investors and companies to create all of their compliance forms, all of the subscription agreements, getting all the paperwork from one person to the other so that I could see the step-by-step process of how somebody would go from somebody who wanted to invest in a company and to actually fulfilling on that investment and making it all compliant, getting the Securities Commission to audit the company, and getting more clients in. In terms of what we do at Raises.com currently, we have detailed processes of saying, here are the standard operating procedures of how you actually go out to the markets, and here's actually how the information is transferred from everything from NDA, subscription agreement, signing, escrow, and all that. And so we actually put those processes together in high detail because those are the processes. And in terms of how a member uses processes at Raises.com, he ended up getting, the family offices and everything to, some people said no, some people said maybe, and then one person said yes. And then based on that yes, they were able to actually go and fly down to the facility to conduct detailed due diligence and that's after a long series of information transfer back and forth. After some minor hiccups and looking at valuation of different assets. But at the end of the day, the processes are the hyper detailed things. And so far we covered inputs and processes. And just for context, people who struggle with understanding inputs, they are people that are very detail oriented. People that are accountants and so on may struggle with it, and people who are very detail oriented may struggle with the big picture, because inputs are really the big picture. People who struggle with the processes are mainly people that are pretty good at big picture and emotion, but they're really not as good as executing. But you need to execute and you need to have the big picture. And third, really, this is probably the most important part, is getting the feedback. And so I mean, in working and assisting people in getting to the point where I was able to get into investment banking several years back, really I needed to listen to the feedback of the market, because I needed to work with exempt market dealers, which were the companies that were allowed to directly connect to investors. And so I needed to listen to the feedback of who were saying yes, who were saying no, and I needed to understand what types of companies would I be able to work with. And so I found at the time it was cryptocurrency companies, because those were the kinds of companies that had the need in the marketplace, because they saw the opportunity of blockchain technology, and they also saw the opportunity of the traditional financial world. And so I listened to the feedback rather than fight against the market. I had to listen to the market and go with the flow. And then that's how I was able to use the feedback of the markets to work for me instead of against it, instead of fight it. And now currently at Raises.com, the way that we do it, simply put, we iterate and adjust every piece, we show the company how to iterate and adjust every piece of information that is distributed through compliant channels for the company's investor market, and it's iterated and message changes every couple of outreaches, because pitch decks, all of this, the financials, they're iterative documents. And so the way that one member is using this is after going to the market and seeing, what really was the feedback, we had to then get our chartered financial analysts to conduct more analyses of the project to make sure that the project still fulfilled all those expectations. And so when you look at all these things, if you work on something and you're banging your head against the wall and you can't find investors, no matter what you do, generally, you may not be listening to the feedback. If I didn't listen to the feedback in terms of who I should approach when it came to firms that are registered, or when it came to the types of people to reach out to, then really you're not going to change. And if we did build a system that didn't adapt to live market feedback, instead it was just based on our hypothesis and our processes, then it will have no connection to reality. So in short, you have to do all three. Number one, you have to have a good input into a system, and this input is based on a hypothesis that you think of something that you think will happen, based on all the necessary information that you have. Number two, you have to have great processes, so you have to execute and you have to commit and do the work. And number three, you have to listen to the feedback that comes out of that outputs and feedback, those processes. And the main goal too is really don't design or don't attach your identity to any single one of these things, because either you'll be too strategic or too long-term, whether you're raising capital, you listen to feedback or anything. And understand that this is something that top military people use. It's called the OODA loop, orient, observe, decide, and adapts. I believe that's what it means. And you listen to Ray Dalio, who talks about the curve. You see the curve on all of his literature, talking about how pain plus reflection equals progress. Basically, any iterative loop, even agile, when it comes to the software world, involves this. If you ever do anything in any environment, you always have to observe the inputs. You have to do the processes. You have to listen to the outputs and adapt to the feedback in any system that you do. And the better you do this, the better you can evolve and adapt and win, especially in this video in the case of people who are wanting to raise 10 million plus. And so with this, I thank you for watching this video. And if you would like to see how we actually apply some of these principles, head to raises.com so you can learn more about exactly how different people approach the capital raising process. And so with this, thank you for watching this video. Go out and execute.